First off, I want to thank the people that have emailed me, that have sent me messages on social media, either correcting some of my information, because my information out of mainland China is opaque with information sometimes, is not always going to be 100% accurate. Even with my top China source, he is in a tier 1 city. He is not always going to get the best information in every single Chinese city, either or province, so tier 2 or tier 3. So I want to thank the people who have been gathering their sources of information, their networks, to their contacts in China, and sending me new information with all this. But the information that we are getting is that there are much higher pork prices just in the last month or two in China, higher chicken prices, and also higher vegetable prices. Things are really starting to accelerate. And with that screen there, it is both appropriate and also ironic that I just looked this up a couple hours ago. I did not know this. I thought maybe it could have been. I didn't fully remember, and then I double-checked it, that 2019 actually was the year of the pig. So this is actually both appropriate and also ironic. Well, year of the boar. Pig or boar. And so China is having a big problem. There are people out there sending me emails saying that no big deal, China has a storehouse's year's worth of frozen pork. If that were true, how come I just got an email from someone else in the last couple days sending me, I think this guy Fred, thank you Fred for the email trying to correct me here. He sent me, I think, 6 or 7 articles just in the last 24, 48 hours talking about how China is literally scrambling like crazy, Australia, everywhere else, trying to secure 50 million massive amounts of imports for cattle in Australia and elsewhere of beef and goats and sheep and other livestock to substitute for the pork. And there's people saying, well, that'll make the Chinese healthier if they don't eat the pork. They'll have chicken. Okay, well, the chicken prices are also going up. I heard from my top China source in a tier 1 city that chicken prices are also up, I believe, 25%. So there's an article here that just came out in the last couple days from the South China Morning Post from a couple days ago, was updated today, but it came out initially a couple days ago from Orange Wang and Kathleen Magramo. It says China's pork prices starting to scare consumers as discontent soars. Across China, prices have doubled. Pork prices have doubled since July, reaching record highs of 30 to 33 yuan per kilogram, surpassing analyst expectations. So this is a combination of factors, a confluence of factors of the African swine flu, of the Chinese yuan devaluing. The yuan has devalued a lot since the beginning of August. It looks like recently, in the last week or so, that the Chinese government and the People's Bank of China, China's central bank, has managed to somewhat stabilize, at least temporarily stabilize, the currency, so it's not devaluing faster and faster and faster yet. It did get as high the exchange rate as 7.179 yuan to the dollar, and now it's down to 7.1167 to the dollar. So it's started to somewhat correct. It may only be temporary though. So a combination of factors with the African swine flu, with the weaker Chinese yuan, the devaluation, and yes, people are saying that, oh, it's good that the Chinese won't eat as much pork. Pork is unhealthy. Pork lard is unhealthy. Okay, people will substitute. Okay, people will switch to chicken. But the chicken price is also going up, guys. It's not going up as fast as the pork price, but it is going up. I hear 25% price increases in major tier 1 cities for chicken, according to my top China source in a tier 1 city. Also, the portion sizes for dumplings with meat in it, with filling of chicken and pork, the portion sizes of the amount of meat in the dumplings is down a lot. I hear more than 25% portion decreases, so they're being killed with shrinkflation as well. So I hear that was recent, that the portion sizes are declining rapidly. Okay, well, let's say that it's bad for Chinese to eat a lot of meat. Okay, well, let's just switch them to vegetables and substitute all meat, and let's substitute 2 vegetables. Well, the price of vegetables, I hear in tier 1 cities, many vegetables, the prices, not all prices, because there's a lot of vegetables, and the prices of some vegetables in China are going up a lot as well. So you have the prices of pork the prices of chicken and the prices of some vegetables that have been skyrocketing now for the last couple months. And the prices in the last year for pork are up a lot. Zero Hedge ran an article that the price of piglets in China has increased, I think, 146% according to their chart. So just crazy. And now let me add too that as analysis here, there are things with the official Chinese government story that do not add up. There are things here that do not add up with the Chinese government story. So this article that I talked about before I went out for a steak on Friday night, I didn't get a chance to go in depth on it. It was from a vice premier from a August 22nd speech. Vice Premier Hu Chunhua, I think I pronounced that okay, Hu Chunhua, and he talked about how there is a big shortage in pork, and they have to work very, very hard to fix it. If you want to read it more in depth, the full translation is from this Dim Sum blog, and the link I put in the video I put out on Friday, one of the videos I put out on Friday about all the crazy things going on in China. But the official narrative, guys, has been that China has already planned ahead for a pork shortage and that they have years worth of frozen pork in storage. The government does. Well, if that were true, guys, why is China scrambling like crazy to arrange imports of beef in Australia and elsewhere, to arrange imports of goats, to arrange imports of sheep and lambs? So why are they doing that? So something doesn't add up here. And I would say that I just don't, in my humble opinion, obviously, because things are very opaque when it comes to China, especially with the Chinese government and what you can and cannot believe with them, I don't think they have this massive amount of frozen pork reserves. Because if they had the frozen pork reserves, why are they scrambling like crazy? And if you want to look deeper into this, there's stuff going around Twitter from people in Australia who are talking about how they're hearing from their friends who are Australian farmers about Chinese purchasers who want to buy up massive amounts of their cattle, of beef cattle. And I also have heard that a lot of dairy cattle in China are being slaughtered for beef. So it just says the story that there is enormous amounts of pork reserves just does not add up. Okay? There has been an admission of a pork shortage. They have talked in this translated speech here, the full speech, which Chinese state-run media guys did not cover the full speech. They only spun a propaganda version of the speech, part of it. If you want to read the full speech, I'll put the link in the information and description section. And I think this adds into China's dollar shortage thesis, that there's just not enough dollars to import everything, whether that's food, energy, metals, gold, and to help alleviate the dollar-denominated debt problems with private Chinese companies, state-owned enterprises, and also bank bailouts. And let me tell you, Lorky, that's funny. That's hilarious, Lorky. And let me tell you why I think things are starting to go bad. So Michael Pettis, if you're not familiar with Michael Pettis, you can follow him on Twitter. He's lived in China for over a decade. Michaelx Pettis is his Twitter. Pettis. Pettis. He was an investment banker. He was a businessman. He's lived in China for over a decade. He put out on his Twitter on September 8th a tweet citing an article from Caixin Global talking about state-owned enterprises are told to pay their bills on time. And then he commented on the article, additional analysis there. He says it's not just state-owned enterprises who have been delaying payments, but also many municipalities have been paying teachers, suppliers, and civil servants late. This piling up of payables should, but typically doesn't, show up in the aggregate debt numbers. And this is why you have one of China's two largest banks, which had announced like an enormous amount of a bailout for a large Chinese province that was helping with a bailout. And also why, remember, in the last 2 months, there was a New York Times article talking about how there was at least $200 billion worth of IOUs out there. So that was in the mainland Chinese economy about people who had already done work for Chinese companies, Chinese state-owned enterprises, and they were unpaid. They had not been paid yet. So what I'm hearing from people who are giving me information and sources, and also from my top source as well, is that the last couple months, especially with this RMB devaluation against the dollar, combined with the other factors of the African swine flu, which has created an enormous loss in the pork population, and then China's inability with the trade war, because remember, they're not importing any agricultural products from the U.S. And the U.S., I stand corrected, I made a mistake. The U.S. is the third largest pork producer. The European Union is the second. So there's really three large pork producers on the globe. China was number one, but they lost a lot of their pork population in the last 12 months. And European Union was number two, and the U.S. was number three. And after that, there's a big drop-off. The gold price to the Chinese yuan was, last time I looked at it, Isabella, it was near an all-time high. So I'm just trying to put the pieces to the puzzle together, guys, that the Chinese economy is going through a lot of stuff. This is information that the mainstream media, the mainstream financial media, and the gold community, they may occasionally cover something on it, but there's a lot of craziness, a lot of problems in the Chinese economy that are accelerating. I heard from one person who sent me information who was speaking with a Chinese factory worker, and this came from like early this morning messages, copies of messages in Mandarin that he translated for me, that their standard of living, life is becoming extremely hard, very, very hard, a lot worse than normal with the higher food prices. And there was another article, guys, that just came out yesterday. I just found this because Michael Pettis put this on his Twitter recently too. So he's a person that you should follow on China. So besides Kyle Bass, besides Christopher Balding. Oh, Christopher Balding had a very good interview that was released on Real Vision TV recently. If you're a subscriber, it'll probably eventually be out for free. I'm not sure if I agree with everything he said, because he was talking about something about a card to buy pork. I think he didn't go into specifics on this. I think what he meant was that there was a small city in China that was using, I talked about this. This was an article from Reuters, September 2nd. A city in southern China is selling a limited quantity of pork at discounted prices to help consumers cope with soaring prices. So I think when he was talking about a card to buy pork, I think that he meant that this city in China was offering a discount card, that you had to have a card to be a citizen to buy the pork, and they were using the card to check to make sure you weren't cheating, so that you could buy a small amount of pork. Let me see here. It says the exact amount that you can buy. They have limits to it. So they were allowing, it was like a gimmick to get people to visit the city or to move to the city, that they were offering a discounted amount of pork. And thank you to the people who are correcting me that not everywhere in China, not every province, not every major tier 1 or tier 2 city was offering a pork subsidy. Apparently, it was only certain provinces and certain tier 1 cities that were offering a subsidy. It could also be, Samajis says, sounds like ration cards. It could also be similar to EBT cards. It could, the cards could just be similar to what's here in the U.S. It could just be for poor people, so who couldn't afford the pork price increases. Maybe it was some type of gimmick or something, or some type of social program. I think there was an announcement recently that China was planning on some type of new welfare program because they realized the food prices are going up. You can speak Mandarin. Donde está la biblioteca? Which movie is that from? I know it's from a movie. I'm pretty sure it is. Anyways, there was a new article that just came out. Maybe I should do a separate video on this, but this ties in with the increasing problems in China from their rationing of dollars. Christopher Balding talked in the interview that it is now a permanent Chinese policy that China will not be importing nearly as much base metals, nearly as much iron ore, and probably other base metals as they have in the past, that China is focusing on their domestic and probably also Mongolia base metal mining industry, which means they don't want to, because they're rationing dollars, they have dollars, in my opinion. but they're not out of dollars, but they don't have a lot of dollars. So they don't have the US dollars because they're not running enormous trade surpluses anymore with everyone. So they're not accumulating massive amounts of dollars with this escalating trade war. And so they just don't have the resources anymore, the dollars. They can print RMB, but they don't have the dollars to go out and import unlimited amounts of food, unlimited amounts of energy, unlimited amounts of metals, unlimited amounts of gold, although it seems that gold is a priority for imports for China. So it seems that gold is one of the main priorities still to use with the dollars. But base metals don't seem to be a priority now for imports, which would, in my opinion, that would decrease demand a lot globally for international metals markets. So you could see, if you think base metal prices are bad now, for a lot of base metals, you could see things a lot worse if this is true. And you see, as an official policy, that China is going to drastically cut back on international imports of metals, base metals. And then you combine that with how China, like I said, is rationing dollars, in my opinion, and that they are strategically deciding who will get bailed, which banks will get bailed out, which state-owned enterprises, probably the state-owned enterprises are in the best, are more likely to get the bailouts, and then which private sector companies, which might be systemic, kind of like AIG was in the US. And that's why it was decided that AIG would get a bailout here in the US, because of their derivatives book, their credit default swaps, and all the other garbage that they sold. And there was this article that came out yesterday from Shi Yu from the South China Morning Post. She is reporting that Xie is reporting, I think it's Xie, X-I-E, Xie. Because she is X-I, right? So Xie. Xie is reporting China to become more selective in supporting distressed banks, say Moody's and Fitch. State support for the Chinese banks will vary as the authorities try to share some of the losses with large creditors, say analysts at Moody's and Fitch. Up to 10% loss sharing by wholesale creditors of Bank of Baoshang and Bank of Jinzhou, skipping its coupon payment on dollar bonds are some examples. Okay, let me continue with the article here. China is expected to continue to extend support to problematic banks, but authorities will be selective in their approach after pumping in billions of yuan to bail out 3 banks in the last 4 months, say analysts. Nicholas Zhu, a credit analyst at Moody's Investor Service, said that while the Chinese government has been quick to deal with episodes of bank stress, as regulators aim to alleviate market fear of contagion risk, amid ongoing shadow banking and interbank activity, they are also determined to push forward their policy goal of maintaining financial stability. Quote, the authorities will become increasingly selective in providing support, especially where banks do not pose significant systemic risk, Zhu said in a report issued on Monday, adding that government support will eventually be more tiered. So this would, in my opinion, my analysis, this would confirm Kyle Bass's dollar shortage thesis that they are rationing the dollars they do have. There is not dollars to do bailouts for every single bank or every single private company that overborrowed in dollar-denominated debt. So in late May, authorities took over Baoshang Bank, followed by the rescue of Bank of Jinzhou by 3 state-owned financial institutions in July, and last month a sovereign wealth fund and Shandong government took part in Hangfeng Bank's debt restructuring. In general, as big banks bring higher volatility to the system and markets when in trouble and pose a greater risk of contagion, analysts typically incorporate a very high level of support to state-owned banks, a high level of support to large regional banks, and a moderate level of support to small regional banks. But the problem is what happened in the US. How first it was IndyMac, right? In 2006 and 7, IndyMac collapsed, I think, 2007. And then you had Washington Mutual and Bear Stearns, and then things started to escalate larger. By then you started to have all the other banks in trouble. Finally, it just kept getting larger banks, and larger banks kept getting in trouble here in the US. So it looks like China's heading down that road. Michael Pinto, who is a brilliant Austrian school economist, he wrote an article about this a couple months ago comparing the Baoshang Bank incident to IndyMac. So you can go on Michael Pinto's website. I've cited that article before from, I think, May. And you can go on his website and go and read that article for free. I think it's pentoportfolio.com or pentoport.com. Should be on there, comparing Baoshang Bank to IndyMac. Specifically, Chinese regulators are likely to avoid declaring non-viability for the 4 Chinese global systemically important banks, namely Bank of China, Industrial and Commercial Bank of China, or as other people call it, ICBC, Agricultural Bank of China, and China Construction Bank, or CCB, the report said. Analysts believe that while there is a low likelihood of either equity conversion or write-downs of these 4 banks' future total loss absorbing capacity, for small banks, some kind of burden sharing by creditors is possible. So that means creditors are not getting a bailout. Creditors would get a big haircut. Burden sharing is a haircut. And this was actually before Baoshan Bank failed. There was through my hedge fund contacts, I've gotten older copies of newsletters from earlier this year and late last year. And some of the Chinese banking regulators inside China in Chinese media were actually speaking more candidly about this in speeches that was not covered by the West. And the Chinese banking regulators and PBOC officials, I think as far back as November and December of last year and much earlier this year, were predicting there would be bank failures. It just was not covered that widely at all by Western media. A guideline issued by Chinese regulators in 2015 classifies lenders with total assets of less than 500 billion yuan, which is 70.2 billion, as small banks. Regulators have seen to it that investors absorb some of the losses when dealing with troubles at Baoshan Bank, Bank of Jinzhou, and Hongfeng Bank. Wholesale creditors like Bank of Weizhou has suffered impairment losses of up to 10% of their net exposures to Baoshan Bank, the Moody's report said. Bank of Weizhou confirmed that it had made a provision of 174 million yuan against 1.75 billion yuan of placements at Baoshan Bank on July 29, 2019. So this non-zero loss sends the message that regulators want wholesale creditors to take responsibility for their valuation of counterparty risk in the future. Oh, so now they're going to focus on good behavior. Yeah, when the damage is already done. When the derivatives position of selling forward dollar swaps, God knows the exact amount, probably in the trillions. Hopefully I can get Kyle Bass on in the near future for an interview and he'll give me an estimate. But, just enormous. And the Chinese banks were ordered by the People's Bank of China and the government to sell those derivatives to try to prop up the currency and short the dollar. It contrasts to a full bailout of Baoshan Bank with public funds, which would have sent a message of regulatory forbearance on shadow banking and interbank activities, the report said. Analysts with Fitch Ratings shared a similar opinion in a report issued on Friday, noting that Chinese authorities will be providing varying support for Chinese banks. So this is going to spook creditors, guys. This is going to spook interbank lending. Remember, China spent 3 months, May, June, and July, and part of August, trying to calm down the credit markets in China, trying to calm down the interbank lending markets, and now this is starting to spark up again about creditors might not be made whole, banks should not trust each other. China spent a lot of time and resources for about 3 months trying to calm this down. So clearly they don't have the resources if they can't stop this. That's my opinion. This proves Kyle Bass's thesis that China does have a dollar shortage and they are rationing dollars. The advancement by Bank of Jinzhou that it will skip payments. Bank of Jinzhou that it will skip payments to international investors on additional Tier 1 dollar bonds is a point in case. While Bank of Jinzhou's case suggests that sovereign support is possible in China, even for banks with low systemic importance, we would not assume all dollar bond securities would benefit from state support, said the report, led by the writer Grace Wu. The coupon skip could be part of gradual government moves to weaken investor assumptions of implicit state support and encourage greater differentiation of risk pricing between financial institutions, the report said. So I would say then that China wasted, if they're going to allow this, then they wasted a lot of time and resources the last 3 months trying to stop that spike in interbank lending charges, because it looks like, guys, that it's about to happen all over again. That we're probably a month or two away, maybe less than that, from another major Chinese bank having problems. Because if they're telling creditors that they're going to get a haircut, then the creditors are going to say, well, maybe I should dump all my credit investments. Maybe I should dump them all now and get what I can. This could start a run on certain types of credit instruments. People liquidating bonds, people liquidating dollar securities in China. People pulling their money out. This could accelerate not necessarily bank runs from bank customers, so depositors, not necessarily bank runs from depositors, but maybe bank runs from creditors of banks or investors in banks. And another article which I think is important, because the narrative, the Peter Schiff China bull narrative, that is that China does not have a debt problem. That, okay, maybe China has some debt, but the Chinese household saves a lot. 40% of their income. I've heard this for over a decade, all the time. People still quote this, just like people still quote that China's going to dump all their treasuries and crash the dollar. If that's true, then how come China is trying to open up their capital markets and trying to get more people, suckers, to invest more money into Chinese banks and Chinese companies? Oh, now China's trying to open up their capital markets to get investment in. So this article came out on Friday. It is based on an extensive Wall Street Journal report. Let me see the exact date of the Wall Street Journal report. It says Chinese youth may have more to worry about than their social credit score, according to the Wall Street Journal. China's younger generations are loading up on debt like drunken sailors. So the Chinese consumer, Chinese households can also waste massive amounts of debt. The article initially was from August 29th by Stella Yifan Shi, Sean Lee, and Julie Werneau from the Wall Street Journal. Okay, according to the Wall Street Journal, China's younger generations are loading up on debt like drunken sailors, and according to the journals Stella Yifan Shi, Sean Lee, and Julie Werneau, this boost in consumption couldn't come at a better time for the Chinese economy. Consumption is dangerous with credit. While previous generations were frugal savers, a product of their years growing up in a turbulent economy with a weak social safety net, the more than 330 million people born in China between 1990 and 2009 behaved much more like Americans, spending avidly on gadgets, entertainment, and travel. The result, China's economy is receiving a much-needed diversification at a critical juncture, mainly amid pressure from a tariff-driven slowdown thanks to the Trump administration. China's economy... This is mainstream financial media bullshit there. The Chinese economy was already slowing down before Trump started putting tariffs on in 2018. The tariffs are just making things worse. And then the Chinese government would not admit to a mutually beneficial trade deal because I think Xi doesn't want to show any weakness. So that's why, if you want proof of that, listen to what Kyle Bass said. Talking about how trade negotiations fell apart 3 or 4 months ago, how there was a verbally agreed upon trade deal and things were going to get signed, a 150-page agreement, and then at the last minute, the Chinese demanded that the Huawei CFO was released, all charges would be dropped, they demanded all tariffs were removed, and then they demanded that 50 pages of the 150 trade agreement that was agreed upon and was supposed to be signed, that 50 pages should be immediately removed. And all those 50 pages were all the items like intellectual property and others that could actually be enforced. So it was going to be it was going to be where China said they had a trade agreement and nothing was actually going to change. The result is that China, okay. Anyway, I went off a little bit on tangent, mainly mid pressure from a tariff-driven slowdown. Trump administration, okay, blame Trump, probably. The almost guaranteed that the 3 people, if they're American citizens writing this article, did not vote for Trump. Beneficiaries of the spending glut include Alibaba Group, Tencent Holdings, and other tech companies, according to the report. The downside, as all too many in the West know, is rising household debt over the past several years as Chinese youth continue to borrow for their purchases. Quote, as household debt climbs, some economists worry the country's debt burdens overall could become unmanageable and weigh on China's growth. There's some charts here about household debt and how much it has increased. In 2008, they had it below 25% of, I think, debt to GDP, and now it's around 50%. Household debt to GDP. Yeah, so it was closer to 0 in 2008, and now it's about 50%, according to the data. According to the International Monetary Fund research. Nearly a quarter, and let's see the other chart here. Household debt to disposable income, guys, it has exploded in China. Household debt to disposable income, in 2008, it was around 30% or 40%. It was like 35%, it looks like on the chart. And now it's above 100%. Looks about 115, 120% of household debt to disposable income. Nearly a quarter of Chinese car buyers under 30, a figure expected to rise to around 60% by 2025, according to Volkswagen Group head of market research and customer intelligence, Zhao Ya, who adds that the demographic will be crucial to the company's success in the country. Fueling the fire are short-term lenders such as Ant Financial Services Group, which charges up to 16% APR depending on the borrower's credit. So that's credit card interest rates to borrow to purchase a car. A 2008 survey in China by Wrong360, a loan recommendation website, found that around half of respondents who took out consumer loans were born after 1990. Most had borrowed from multiple lending platforms, the survey found, and nearly a third took out short-term loans to reap. Oh, wow. Nearly a third of people, nearly a third of total younger adult borrowers, men and women, took out short-term loans to repay other debts. So they are opening one credit card to pay off another. They are borrowing from Peter to pay Paul. Nearly half of them had missed payments. One of the most popular ways to borrow is a Huabei account, a revolving credit line embedded in China's Alipay mobile payments network. Huabei is extended loans in excess of 1 trillion yuan, or more than 140 billion, since its launch in April 2015. Wow, it has exploded in credit in only a couple years, in only four and a half years. A person familiar with the matter said, Ant Financial, which owns Alipay. Yeah, Ant Financial, which owns Alipay. I thought Alibaba owns. Okay, Alibaba must own Ant Financial then. Alipay declined to disclose any figures related to Huabei. So a lot of the debt is from mobile payments. To avoid catastrophe, some economists say the Chinese will have to rein in household borrowing to sustainable levels. Worst case, a glut of consumer, government, and corporate debt could amplify the economic slowdown. According to JP Morgan, China's ratio of household debt to GDP will reach 61% by 2020, up from only 26% in 2010. Currently, this is higher than both Italy and Greece and could quickly become a full-blown crisis if young Chinese workers lose their jobs or see their wages cut, or they have to pay, I'll add here, or if they have to pay much higher food prices, and also they're paying higher rent, I believe, a lot higher rent too. That said, at present, default rates on consumer loans appear relatively low. How do we know if they're telling the truth about the real default rates on consumer loans, guys? Right now, over 8.3 million Chinese college students are expected to graduate versus around 6 million just 10 years ago and only 165,000 in 1989. Fortunately for the glut of new, quote, qualified applicants, some of China's largest employers, such as e-commerce company JD.com, have cut jobs as their growth has stalled. So, where have we heard this before? As the U.S. saw in the 2008 financial crisis, default rates can shoot up rapidly when growth slows. Or, as in the case with China, which does not normally have accurate economic data and can sometimes have just egregious accounting fraud, even worse than the U.S. Watch the documentary The China Hustle. The default rates could already be sky high, and we wouldn't know. This generation has no idea what a rainy day feels like, says Dong Tao, an economist at Credit Suisse in Hong Kong. Any consumer credit boom will always be tested, no exception, he says. He points to mortgage debt as a deepening problem across China's economy, including for young people. Mortgage debt outstanding grew from $1.1 trillion in the fourth quarter, $1.1 trillion in the fourth quarter of 2012, to $3.9 trillion as of June. Mortgages accounted for about a third of China's medium to long-term loans, up from 20%, so up from 20% to 33% in 7 years. So up from 20% in 2012, according to that's China's own data, the People's Bank of China. You can't say I wasn't using China's own data there. The journal's case study in spendthrift Chinese youth sounds a lot like kids in America. First, we meet Liu Biting, who's operating at the margin and hasn't yet taken on debt. He's 25 years old, says she spends all of her paycheck each month, about $1,400 a month from her marketing job in Shanghai. About a third goes to rent, the rest on food, her sewing hobby, going out, music, and other products. So far, she has avoided falling into debt. Until recently, one of her monthly expenses was a clothing rental subscription that cost $70 a month. She liked it, she says, because she could try out a lot of strange clothes. She discovers makeup brands on WeChat account she follows that recommends products, many of them local. So for her parents' generation, for them to get a decent job, a stable job is good enough. And what they do is they save money. They buy houses and they raise kids, she says. We see money as a thing to be spent. Her parents repeatedly ask her how much she has saved in her 3 years of working. She says, I'm sorry, probably nothing. All of her friends are like this. We have no savings and we don't really care about it. Sounds like American millennials too. Sounds like they've gotten westernized here. That China's gotten the Western credit bubble consumer spending addiction now. Next, we have 24-year-old Wang Xinyu, who says he was about $11,200 in debt spread over 6 credit cards. And remember, guys, the difference right now between the U.S., the European Union, and China is that the average per capita income in China, according to a lot of places, is only around $11,000. So that's the average per capita income per person is only around $11,000. Most of Wang's debt was accrued while he was in college. Now he earns around $600 per month at a Beijing bookstore, putting his entire salary toward paying down his debt while still relying on credit cards to pay for food and rent. Sometimes he uses one credit card to pay back another. Ooh, this sounds like really bad Americans. Chinese parents, meanwhile, are helping their kids too. So lack of financial education, lack of savings, debt, spendthrift consumer behavior. It's becoming very common in China. Chinese parents, meanwhile, are helping their kids to buy homes, which Tao, the Credit Suisse economist, sees as a red flag. Japan saw similar multi-generational real estate purchases in the 1980s, sometimes with 3 generations helping to pay for a mortgage, which may be a sign that the market is overheated. Shortly thereafter, Japan's economy took a nosedive and real estate prices corrected. What happens in China if your social credit and your financial credit bottom out? And let me get one more article here. Okay, I have a lot of articles open. Okay, let me see if I find it here. I was going to talk about how since 2008, China has created more money supply, more than double the money supply of the US, the European Union, and Japan combined. Let me see here. Okay, here we go. Found it. The real helicopter money since 2009, China has created over 21 trillion of new money, more than double the US, Japan, the European Union combined. Thank you guys for the super chats. Thank you, Jim. Thank you, Dimitri. Excellent question, Dimitri. Do I think a wave of Chinese real estate selling in the US and Canada is coming? No. If anything, Dimitri, if the Chinese currency devalues, there will be more money trying to get out of China faster to escape currency devaluation. And that money, this is why you're seeing a resumption in the last 18 months of the Australian housing bubble, especially in Sydney, Melbourne. Because remember, in 2017, the Australian housing bubble was starting to get wobbly and there were starting to be big crashes, and now it has resumed. So the construction increases are back, paying for $2 million Australian dollars for a dilapidated piece of property in Sydney that has to be torn down immediately. So no, I actually think the opposite. So I think there would be even more buying unless the U.S. government or the Canadian governments forced Chinese selling. So if the U.S. maybe threatened Chinese owners of real estate saying, we're going to tax you, you can't park your capital here. So I think it would be the exact opposite. So I think more and more currency devaluations in China on the RMB or the Yuan, whichever one you want to call their currency, is more likely that it will cause more flight capital out of China, which means that people inside China in the mainland will be more desperate to pay almost any price for real estate in Australia, in certain parts of Canada, and the United States. And I don't think people in China want to sell their real estate. Look, Dimitri, I don't know if you're in the United States. I'm not sure where you are, but I have a lot of real estate contacts. I'm friends with real estate investors. My best friend is a really good real estate agent here in the DC metro area. So I see him every week. I see him a couple days a week. And we talk about, how's the real estate market here in this area? foreign buyers. Amazon just opened a location here, so there's crazy amounts of speculators that are buying, paying all cash for properties around here, hoping for the greater fool that someone from Amazon will come in, have to buy a house, and will overpay. So there's a lack of inventory right now here in the DC metro area. But I've heard stories over the years of just like Chinese families coming in 24 hours or less and buying properties almost sight unseen, paying $50,000 or more. Heard very similar stories in Vancouver as well. So that's happened in this area, in the Washington, D.C. metro area. I've heard it from real estate contacts in other parts of the U.S., especially in California. And I've heard the same thing in Vancouver. Yeah, so the Chinese at a certain point, if they view real estate in other countries, it's an insurance plan, it's an escape plan, it's their version of prepping. There is a lot of Chinese money in real estate outside of China. A lot. A lot of it's in Hong Kong. Hong Kong has the, I believe, the highest cost per square foot in the whole world. Okay, let me take a look at Jim's... Okay, thank you, Jim. Thanks, Jason. Keep up the good work, Jim says. You're welcome, and thank you for the super chat tip. Greg sent me a super chat. Thanks, Greg. Okay, let me look at listener questions and comments. There's a lot of articles here, guys, if you want to go in depth, but my sources, and I'm getting more information. People are sending me more emails with more story links. And one guy was trying to tell me I know nothing about the food problems in China. He sent me all these stories, this guy named Fred. And he doesn't realize that it disproves the China narrative, that China was claiming there is no pork shortage. And for many, many months, China has claimed that there is no pork shortage, there is no problem with food prices. And also, the narrative has been that China has this enormous frozen pork reserve in their government freezers. And what they're showing with their behavior by trying to negotiate deals with Australian farmers for beef and these other imports. Even, I didn't mention this because I think Zero Hedge screwed up the story in the last week. Zero Hedge talked about enormous amounts of donkey imports from Africa, and Zero Hedge mistakenly said that donkey meat is a delicacy in China. I spoke to my top China source, and he said that donkey meat is not a delicacy in China, that it's what poor people buy. Kind of like how rat's on a menu, that donkey meat is disgusting. And there could be like diseases on it, but there's been an enormous increase in donkeys for donkey meat from Africa. Zero Hedge just ran a story on this in the last week. So China's dealing, to sum up everything here, guys, China's dealing with a lot of problems. The U.S. has a lot of problems. I cover those. China has a lot of problems. The mainstream media, the mainstream financial media, and especially the gold community, they just ignore a lot of the problems. Are Chinese picky about their protein? It seems a lot of them prefer pork and beef. But it's with the prices going up on pork, it seems a lot of people, from what I'm hearing, Troxel, the stories I'm hearing, a lot of people cannot afford pork right now. So one of my listeners has family in Guangzhou, and apparently there is no pork subsidy in Guangzhou, so I assume that there was a subsidy in Guangzhou because my source, who does not live in Guangzhou, lives in another tier 1 or tier 2 city. My top source told me that there was pork subsidy, so apparently there is no pork subsidy in Guangzhou, and a lot of people in Guangzhou cannot afford the pork price increases. So people will substitute. But here's the problem. If you're eating a lot of pork and you substitute to chicken, and then the chicken price goes up and the chicken price keeps going up, the chicken supply may not be able to keep up with chicken demand unless prices are going to rise. And then that means, okay, well, what's the next thing that's substituted to? Well, the vegetable price. Some people are saying, oh, well, people in China should not eat much meat, it's not healthy. Well, the price of a lot of vegetables are also going up. Aggregator says the trade war has turned pork fried rice into dog or donkey fried rice. That's it's an insensitive joke, man. It's politically incorrect. Okay, let me look at more listener questions and comments. So thank you to Fred for sending me all the articles showing me you thought that you were proving me wrong, but you didn't understand that the articles you showed me were actually proving me right, that the Chinese government is lying about their frozen pork reserves. I mean, should we really? I don't trust any government, guys, at this point. I really don't. But should we really trust a government to tell us the truth routinely when they have a 10,000 plus person propaganda building in Beijing? Should we really trust a government that has one of those and has state-run media? Not that the American media is good, but I mean they're official propaganda arms. Crazy Ant says he thinks China just lifted some tariffs on U.S. pork and meat products. That would not surprise me because, you know what? Higher food prices, if they keep going, guys, this is going to be big civil unrest. Why are you talking about higher food prices, Jason? It doesn't matter to the economy. Yes, it does. If food prices keep going up, there will be civil unrest in China. The consumer will substitute, will switch, but if they have to keep doing this, people will eventually start complaining, start protesting. Especially when the Chinese economy is slowing down and there's a lot of signs that factories are not doing well. There was more data coming out that Chinese factories, they call it deflation for the industrial output numbers, but that just means that Chinese factories are not able to charge higher prices and that they have too much inventory and have to lower their prices to sell a lot of the items that they produce. That just means there's overcapacity, overproduction. To me, as an Austrian school economist, that is massive misallocations of capital and or they're doing bailouts. So either the Chinese banks are not calling in the loans, or the Chinese factories are getting some type of rebate or bailout. Ryan says we are only 9 meals away from anarchy. Well, here in the U.S., the just-in-time supply chain is set up that during 2008, when the commercial paper market froze, the truckers and the truckers that bring the food from like the railways and the ports to the grocery store. So they bring them from the warehouses. They're the last, 20, 30 miles of the journey. Those guys were needed. They were financed in the commercial paper market. And when the commercial paper market froze, we were within about a week to 10 days of having no food at the grocery store. So that's why the Fed had to step in with the commercial paper market, the bailout in 2008. We were very, very close when everything froze up in 2008 here in the United States to no food at the grocery store about 10 days away if the Fed did not back the commercial paper market. Koises nailed it. He says the Chinese consumer can't spend anymore, the U.S. consumer can't spend, and the European Union consumer can't spend. I would say that's on discretionary stuff. And people will pay for the necessities of life. But a lot of the discretionary items, the discretionary consumption items, the frivolous stuff, that stuff will be cut first. And then that's why in dating, you have girls demanding pay to play here in the West. Because they want fun and the guys have to pay to play for the fun. And yes, that has always happened, but no, it's not. It's increased on a scale that you would not believe. To a certain extent, that has always happened, but now it's what is called "quote unquote" dating now is essentially soft prostitution now in major U.S. cities and metro areas. It's very transactional. It's basically a business deal, where the girls play the guys, that they match with off each other, negotiating higher and higher offers. Okay, well, I think I've covered a lot of this pretty well. So China is rationing their dollars. I would expect to see a lot less Chinese demand and imports for base metals. And watch the dollar to yuan exchange rate. How weak is the yuan going to be against the dollar? Is the yuan going to go to 7.5 to the dollar? Is it going to go to 8? Because the weaker the yuan gets against the dollar, guys, the worse this stagflate and lie, the worse the higher food prices will be, especially if China's not going to import any American food. And my buddy Daniel Lacaille wrote, and I'll give him a plug, he wrote an article about this last month about China's currency war. So I'll attach a link to that in the information and description section. Thank you very much to my almost 150 now Patreon account contributors. I'm so grateful. You guys are making my life a lot easier, a lot less stressful. And my almost a dozen now monthly PayPal account contributors. If you throw me a tip once in a while, that's great too. If you don't have any money, it's fine. You can just hit the like button if you like the content, you want more of it. It's going to allow me to reach a larger audience. Almost to 30,000 YouTube channel subscribers if YouTube doesn't slow down my growth rate. And finally, over 5 million views. And my buddy Tho Bishop at the Mises Institute, shout out to him. He's a podcast listener now. He's doing great work. He wrote a great China article in the last month or two. He has a new article coming out soon for the Washington Times about the Chinese economy and the Austrian School of Economics analysis on it. So be on the lookout for that. That'll be in the Washington Times, probably, and on the Mises Institute website soon. So definitely look out for that. He's doing good work. He's one of the few people at the Mises Institute who are warning people about the Chinese credit bubble, the Chinese housing bubble, and also their nonstop money printing over the last 10 years. And yes, all other countries are printing lots of money. All these governments and central banks are doing endless amounts of stupidity, but China has increased it faster than any other country in just the last 10 years. Okay, guys, bye for now.